Okay, we are ready to start. Let me share my screen. Screen number 1. What a week. What a week. This week will be crazy. All right. It will be a very, very good week in a sense, of course, but it will be a very, very volatile. Lots of volatility probably happening for this week. So risk management will be key to this week. All right, so manage your risk, manage your exposure, manage the swaps, because it's tomorrow, it's Wednesday. So if you are holding positions, know that every Wednesday the brokers charge triple swap, and this is very, very clear on the MetaTrader. If you click Control U, you go to the pair, whatever pair, let's say euro dollar, and you go to specifications just at the bottom, scroll down, and then you say swap rate, and then on Wednesday it's 3. So that means it's 3 times the swap. So let's say you are on long at this moment. It's $12 negative. So they're charging you $12 to stay long on euro dollar. Therefore, on Wednesday, there will be oh, sorry guys, one lot. Okay, you have to be one lot. So if it's less than a lot, then of course it will be less than $12. But on Wednesday, this $12 will be $48. So you will pay $48 on Wednesday, and then normal on Thursday and Friday. Okay, so just manage that. Be sure to be aware. All right, be aware of that. All right, this week we already started the week on Monday. Let me put this time correct. We started the week on Monday with the Spanish CPI coming lower than expected. And then we had a few other news for German, and then consumer confidence for Europe, but that's only for the month of April, so it doesn't have much influence. German CPI month over month came in lower than expected on German. Okay, and just in 2 hours we will have the Europe CPI. All right, I've mentioned that multiple times. Okay, German holds a big take of Europe. All right, I just want you guys to know that German holds a big take of Europe. Therefore, if we had, if we have, right, a lower CPI year over year and month over month on Europe, on German, we can expect Europe, the Eurozone CPI, to be lower as well than the previous, right? CPI lower than the previous. Okay, we will get there in a second, but I just want to make sure you guys have this in mind. Okay, so Tuesday now, it's today, right? And we had manufacturing PMI for China. That was really good, actually, 50.4 compared to the previous of 50.8, and the consensus of 50.3. You know, it's good. Of course, it's good, but nothing out of, whoa, this is so good. No, just normal. 0.1%, 0.1 base points higher than expected. Okay, French GDP came higher than expected, 0.1% quarter over quarter, and well, that's a bit better. the consensus was 0.9. It came at 1.1 and was revised up the previous. So that's good. And then just now we had the Spanish GDP. Spanish GDP came higher than expected, all right, with 2.4% on year over year and 0.7% quarter over quarter. Now, another thing here is if we look to those numbers, they're pretty good actually for Europe. Okay, so when we have Eurozone, when we have these, the Europe, it means the Eurozone, so the whole Europe, all right, the whole Euro area where the currency is Euro. That is France, Spanish, French, France, Spain, German. What else we have? We have German, France. Yeah, these are most of them. All right. So these are the Euro countries that use Euro to trading as the currency. And therefore, we can expect already this to be higher. Okay. Because look, all of them have been higher. So if we have a higher Europe GDP, I'm not surprised. Now, we will have as well the CPI. CPI here is expected to be no changes. Okay, so they are predicting no changes at the inflation. All right, inflation data, then predicting no changes. Nothing up, nothing down. This is it. Again, this is year over year. All right, and this is month over month. Okay, now year over year is more important for Europe than the month over month. Okay. Sorry, guys. Okay, everyone is muted. That's good. So, as I was saying, if we have a 2.4 as expected, it's good. All right. Nothing changed actually. So if it comes, let's say 2.4 here, okay, it will be no change from the previous, no change from the consensus. Sorry, as the consensus expected, and still a good number. Remembering that, let me show you Eurozone inflation target. We have a 2% over the medium term. Look, we are at 2.4, okay? 2.4 is not far from 2%. Okay, so that's pretty good actually. If we can reduce this 4% here, we can have Eurozone actually with inflation under control. Okay, and this will be one of the key reasons for the ECB to cut the rates. Okay, this will be a decisive point. Of course, we have all the data to come on, let's say, to come on stage and present the show. But for now, the market is still looking for the inflation numbers, right? Even if it's PCE, that is the inflation on the consumer, sorry, on the producer aspect, or if it's the consumer. Now, I was chatting with one of my friends. I don't know if I can say his name, but I was chatting with him today, and he was like, one of so as I was saying, I was chatting to him, and he was like, one of my mates asked me, this was him saying to me, because inflation is still going up, but the numbers are not influencing in my own perspective, in my life. And the answer is pretty simple. What is the CPI? CPI stands for Consumer consumer price index. Okay. So that means that it's not because these went up, all right, that your numbers on your daily activities and your daily life expenditure will go up as well. This is just a basket of goods, okay, that have 100 items, okay. So on these 100 items, maybe the government thinks one of them can be used, for everyone, or let's say 20% of them, everyone into the economy use it. Or maybe you don't use those 100 items. Those 100 items are, of course, you have to use bread, food, in a sense, okay? Plane tickets, okay? And so on. The list is very, very big. So as I say, it's 100 items. So sometimes the plane tickets are more affected than the food prices, but you don't buy plane tickets, so you don't felt the inflation on that. Okay, so there's lots of ways to feel inflation into the economy. But anyways, so that's a very important take, and we will get to it in a second on the chart. I'm expecting, okay, so that's my take here. My take for this guy here. Oh, wow. Why is not having... Oh, there you go. Here. My take for this is lower numbers for Europe CPI. Okay, this is my take. I'm expecting it to be lower, right? What are you guys thinking? You guys think it will come higher, will come as expected? Any ideas?
Oh, okay, Santos.
Yep.
Yeah, this is my idea. Okay. For the Eurozone now, you can see that the German are performing very well. And per the news that came this morning, I think it wasn't having any high impact. So you can see from today's news from Europe. That's my suggestion. So, and I think previously, the German are growing a little bit more. We were all expecting them to go low, but honestly, things are now changing. And from the news that this morning coming from France and go, they was trying to say that they are building something in the CPI. I think things are going a little bit more. So my take is that Euro USD is consolidating. There's trying to be a turn around. There's
Yes.
trying to be a turn around, sure. But Euro may actually, if Euro USD will sell deeply, it all depends on the rate cuts.
Yes,
But
I
actually, for the
agree.
CPI, yeah, for the CPI data that they are coming out, well, it can be confusing. If not that, like we all go in the direction of the CPI coming low. But actually, well, let's see what the market have for us, because I think there will be a little, if it doesn't come 2.2, maybe it will come low, but it won't come lower than expected. But it will be maybe 2.2 there, because the German are doing well. If German, as you said, if German were failing throughout the month, like I can tell you that Euro USD will shorten very, very severe, but the German are trying to make things harder for the Euro
Yes.
USD to sell. So my take is I'll wait for a breakout, but
Yeah,
they
look,
are performing.
I agree with you in terms of, German. I do think that Germany is doing quite a good job, but we can't forget that one of the things that does move euro dollar up or down is the Dutch gas, right? The TTF gas
Yeah,
prices.
sure.
And another thing is the natural gas prices have been into the lows. I don't think they have this on TradingView, so this is why I'm looking at here. Let me do 1 month, maybe. Yeah, there you go. So look, it's the lows of the lows of the lows. 1, 2, 3, 4, 5, 6. Oh, here you
Sure.
go. Oh, that's the one I want. There you go. So it's the low of the low, the natural gas. Okay.
Yeah.
So basically, it's showing to us that every time, so let's say the natural gas here was very, very high, August 2022, okay? In August 2022, let's have a look on the euro dollar price. August, okay, with daily, that's 23, August 2022 here. So as soon as we hit it, the high of the gas price, of course, that was the high, okay? But let's have a look when it's starting to go up. So it started to go up on May 2020. So let's have a look on May 2020. May 2020. There you go. May here. So, well, euro dollar, started to go up because the euro that was going up. Well, for the last 10 years, it was normal until $6. Okay, we can see here. Let's say 5.15. It was normal until 5.15. Soon as we break the 5.15 mark, that is on September 2021. September 2021, June, July, September. September 2021, look at what happened with euro dollar. Okay, euro dollar started to go down, down, and down, and deeper and deeper. And then we reached the top point on August 2022. That was here, August 2022. And then we had this back, and then gas prices started to go up, down, sharply down, and down, then down, 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 and then up again on October 2023, and then continue to go down. And then here we are. Okay, we go into sort of an uptrend, stagnated until the well talked range 111 to 105. So look into a very technical perspective here, right? Let's see, 111. There we go. So this is a sort of the range we having at the moment. We could break on the top here for once, but that wasn't a big break here. Anyways, let's eliminate these. So 1, 2, and then now coming back down to 105. This is where I'm expecting euro dollar to be in the next few months. Okay, not only me, as of course some big institutions as well, like talking JP Morgan, Goldman Sachs, and some others. So when we look to the natural gas, I show you guys the TTF. Where is it? Because it's easier to see, and I can actually use it on the trading view. Otherwise, I would have to come here and everything. So, but look at these. This is gold. It's right at the beginning, right at the bottom. So these, of course, have one influence. Maybe it makes euro dollar to go higher. Okay, maybe. Or it started to go up again and make euro dollar bad again. But remember, all the natural commodities like oil, natural gas, crude oil, Brent oil, whatever, coal, gold, they do have a big take, huge take, same as gold. They have a huge take on geopolitical tensions. Okay, so we can't forget that most of the moves done by most of the big moves, of course, this one wasn't only because of the war. Okay, it wasn't purely because of the war. I don't know if you guys know, but central banks was required to have 80% on the reserve. And what happens is that, well, some of them went to the US dollar and most of them went to the gold. And therefore, gold, started to go higher and higher and higher. Everything was combined, of course, with geopolitical tensions between Israel, Iran, and Hamas still going on, Ukraine and Russia, and some other things. But still, okay, natural gas prices are very, very, it's a very dangerous thing to trade if you're not good on geopolitical. So I prefer to step off from those types of instruments, but use them as a confluence to trade other ones like euro dollar, let's say. Okay. But anyways, so as I was saying, I'm expecting someone, Aditya told that it is coming as expected. Where is it? Here. As expected. Santi told that Europe CPI don't make a big impact. I agree. I don't disagree with you, but we can't forget that it is a big thing for Europe. I know what you mean, Santi, because we're going to have FOMC this week, and this is what the market is expecting. I completely agree with you, but we can't rule it out the chances of the market look at the Europe CPI as well, not only for the Forex, maybe for other things as well, like equities, indices, and gold, and I don't know, some other stuff. It would depend on how the CPI come in. Look, to be honest, we could go to the, where is this? To the ECB. Okay. I want to show you something cool. I'll show you later. Oh, that's nice. See, he pops in. Monetary policy decisions and statements. Monetary policy decisions. There you go. 11 of April here. That was the latest monetary policy statement. Okay. Economic activity, inflation. Inflation has continued to decline from an annual rate of 2.4% in February to 2.4% in March. According to Eurostat's flash estimate, food price dropped to 2.7% in March from 3.9% in February. Look, see, they're doing a good job. It's hard to say that they're doing a good job, but I have to admit, it's quite good. Look, from 3.9 to 2.7, that's really good, actually. It's more than 1%. When energy price inflation stood at negative 1.8% in March after negative 3.7% in the previous month.
Hello, Santos.
Yes.
Oh, sorry for disturbing.
No.
For this last monetary policy that they released, if we don't take care, this is what they are saying, that inflation is coming down. If we don't take care and the CPI comes good or comes as expected, I think they are going to change their mind again. So we should be very, very careful on this monetary policy they posted, I think around 11 something of that the last month or something.
Yeah,
so
correct.
We should be very, very careful because, as I said, although, yeah, I think Euro USD will shorten to 0.05, but we should be careful. We should be, you can see how the trade is ranging. It is really, really ranging. And if you don't take care, these people can, change and manipulate the market again. Because for next month, if you don't take care, Euro USD, it will be up and down until maybe 0.05.
I agree. And even they say here, inflation is expected to fluctuate around current levels in the coming months and to then decline to a target next year, owing to weaker growth in labor costs and the unfolding effects of a restrictive monetary policy. and the fading impact of energy crisis and the pandemic. Look, what they mean by that is that it should fluctuate around 2.4, 2.5, 2.3, all right, between those levels. And these, of course, makes euro dollar go up and down, up and down. So, but I continue to expect euro dollar to, you know, if we break, yeah, we will see soon. All right. Okay, continue. We have even today. Oh, that's a very, why they need to do it 31. Anyways, so they have GDP month of February and month of March for Canada. And then we have Chicago PMI from April. And then on Wednesday will be holiday in most of the G10 economies. So Germany, Switzerland, Italy, France, Spain, Singapore, Hong Kong, South Africa, Russia, Brazil, China, South Korea, China, South Korea. Why does two? I don't know. United Kingdom and India will be most of them on Labor Day, and here will be the Maharashtra Day. All right. After that, we will have the ADP non-farm employment change at 10:15 Australian time, and we're going to have the S&P Global US Manufacturing PMI at 11:45. That's going to be very interesting to see. Thursday, we have ISM manufacturing prices and ISM manufacturing PMI for US at midnight on Australia time. FOMC statement at 4 a.m. FOMC press conference. And of course, the Fed interest rates decision on Thursday. Now, let's jump on the here as we breaking down the economic calendar. You know, we go and talking. But let's come to this thing here again. Right. 1st of May is the day, okay, where the FMC will come. We do all the drama. We do all the theatre piece again. You know, and it will be a completely different rhetoric. All right, completely different rhetoric. I guarantee you guys that. All right. Why? Because we're having high inflation. And they say that inflation would be sticky this year, but they say that last year. Okay. They say that last year. Everyone was expecting a cut on March. Well, that didn't happen. Then they put it to May. Well, that's not going to happen as well. And then June, that's not going to happen as well. And then July, that's not going to happen as well. And then September, oof, maybe it doesn't happen as well. And then November, oh yeah, finally a cut. Wow. And in December, no cut. Guys, why everyone is expecting the Fed to cut 7 times? Remember December, I was expecting. I was. Everyone knows. All right? I'm a human, and that time was a completely different time than now. So I always say to everyone, all right, I say on the podcast, I say on the videos, I say on the webinars, the market is a human nature. It changes every second, and you need to adapt yourself to it. The economy, of course, the economy has a duration of cycles, but things like these precipitation of rates, this change every day, varying news data from data that goes out on the stream. Therefore, be sure to be present on those moments. All right, just a second. I thought I would sneeze. I didn't. Anyways, so coming back here to May, 97.3% of the market is not expecting a cut. That's a big surprise. Wow. Well, it's not. Why it's not? Well, let's just have a look at PCE. USA. That's not what I want. PCE inflation USA. United States PC price index annual change. This one. There we go. Here. So if we look at the past 5 years, on the bar charts, of course, since 2022, 2021, we started to have the COVID. Let me grab my pen. We had the COVID since somewhere around here, between somewhere around here. And then we started with the pandemic, started with closing everything. And then on the top was the 7%. These 7% was all getting to the CPI, to the final consumer, right? Because someone have to pay the PCE. PCE basically goes to CPI, and then the CPI pays and then goes to the government. Okay. Anyways, so then it falls, then a bit of stability, and then continues to fall, and then now an uptick. So on 2023, in the last, let's say 3-4 months, December, November, October, September, I was expecting actually the Fed to cut on 2024 right on March. Okay, so that's the first quarter. One cut for quarter. I was tired to say that the US dollar was gonna get pretty bearish, but that actually didn't happen. What did happen is the market didn't price. Well, the market priced in, all right, the market priced in the rate cut, but then the data became to go all the way from what it was coming. So it was, it was reducing. And we had one uptick again, and then the whole market was like, oh gosh, let's go again, all right? So this is exactly what is happening now. So we had a higher tick, and the Fed has to justify this higher tick, because if we look here, month after month was going down or similar, okay? And then we had an uptick. So they want to justify this uptick here, and it will be a completely different, completely, I don't know how to write that, completely different rhetoric, okay? So be in mind, there is possibility for the US dollar to get strong, right? There is possibility for the US dollar to get strong. And for this, sorry, just a second. And for this downtrend here, well, most of people are calling this a downtrend already, when it's just a pullback. Okay, wait a minute. All right, and this downtrend here starts to go up, then breaking this top and not breaking this bottom, this is an uptrend. Okay, then we will see. All right, then we will see. I'm just warning it. I'm just warning it. Now, going ahead, that's going to be on Thursday. Then we're going to have CPI for Switzerland. We're going to have GDP for Hong Kong. We're going to have non-farm productivity, unit labor costs, initial jobless claims. This, of course, does have a big influence. No, it does have an influence, but because it's a weekly data, it doesn't influence so much as a monthly or yearly data. And then, where is it? Here you go. And on Friday, 3rd of May, we will have the big boy of the week, non-farm payroll, unemployment rate, and average hourly earnings. All right. Oof, that's going to be a big take. Now, I've wrote a blog on that on Monday, and not today. Today I didn't touch base much on the NFP, but I've definitely touched base a lot on yesterday's blog on Monday. You can go to ACY website and you can have a look on that to the Learn tab, and then into market research or market education, something like that. It will be there. So my expectations here for the non-farmer payroll is it will come higher, but I was actually chatting with another friend yesterday, and I asked him. He was a trader for a bank back in the days. You know, he's old now, but I was chatting to him. I asked him, I was like, "What do you think about NFP, man?" And he was like, "You know what's funny? They can tweak the numbers. They can put whatever number they want." And I was like, "Yeah, that's true. Yeah, they can just take a little bit off from one, take a little bit off from another, and then they readjust it on the next month, and that's fine." So they don't want the US dollar to lose its strength. They don't want it to happen. Of course, that's simple, right? But I asked him, well, what about the average hourly earnings? They can't tweak that. Yes, they can. So it's a very easy data for US to manipulate it, but let's not work on this scenario as oh, the data is manipulated, blah, blah, blah. No, it's not. Let's work on a more economic scenario here. I think it will come higher, but again, the big thing here is the average hourly earnings that is expected to come as previous, so no changes. So previous was 0.3, and the consensus right now is at 0.3 as well. So no changes on there. All right. But the non-farm payroll is expected to go from 303,000 to 243,000, and the unemployment rate is expected to go no change. All right, 3.8 from the previous of 3.8 as well. So now let's have a look on the market here. Okay. Euro pound. Last week I had a short trade here, and then my target profit was here. So it got hit. I think I've mentioned that for you guys. And someone mentioned that it was on a range. Yes, it was, and now it's back again. So I'm just, making sure you guys remember that price action is not everything. If it breaks, it can come back down, not a problem. Okay, it's not because it broke a box that it will continue to go up, but I get it. Okay, I get it. It's fine. Now the biggest support here is on this region. Of course, I'm not holding the trade anymore. I've closed it already, but it would be great to see a breakdown to this level so we can come to the levels of 84,400. That would be pretty big move for Euro pound. USD JPY. USD JPY is pretty hectic this week already. So starting Monday, we had a here to here. So that was the move, right? So we went up, barely touched the 160. Okay, we touched the 160 on 160 here. So we touched 160, came back down. So the board have done a intervention. All right. So Bank of Japan have done an intervention at this level, making the the JPY stronger and falling it down here, right? Somewhere around these levels. Look, I'm expecting it to continue to go up. All right, I'm expecting it to go up. It's always been like that, and I've actually mentioned that on my video I've posted today. So if you haven't watched it yet, I would definitely recommend you to watch it. It's when I mention about the Bank of Japan intervention. So yeah, look, I'm expecting it to continue to go up, even though they've done the intervention. They've tried multiple times. We've seen these already happening last year, 2022, 2018, and some other years. So it just, they've tried multiple times. We know what always happened. It of course goes down pretty hard and then continues to go up, break this low, break the highs again, and goes with the flow. So that was a pretty big rally already last year, 2023. This year already, 2024. If you only bought Japanese yen on 2024, that's on here. Sorry. There you go, here. You've made 11% in 3 months. Well, 4 now. Okay. So pretty crazy move already happening on USD JPY. On the whole, top was 13%. So it's a very good carry trade. All right, very good carry trade to have on the portfolio. And I do expecting it to go to 170 this year. Okay, I've mentioned that already multiple times. Euro dollar target wise 105. I've mentioned that already. It's just, I don't know where would be a very good spot. This would be a lovely spot, but it's combination with the fib. But we've touched the 50. If you go 61, that would be good. That would be good. But looking to trade on shorts for euro dollar. Pound dollar, exactly same. Okay, we've reached it. The target here I've mentioned at 125, but looking at the 120 level for GBP USD, NZD USD, this is the target, 0.58 300. USD CAD, not looking to trade at the moment. Okay, we've braked these highs. Maybe it's coming back to a pullback or something. But USD and the CAD have gained strength just because of this. Okay, because of this big move here on the oil prices. Aussie dollar, I'm definitely, my strategy says short. Okay, so I'm continue to short. As Nathan Bray say, he's, as a good Aussie, you should short the Australian dollar. What do you think about US NFP this week? As I've mentioned, Senti, I'm expecting it to come higher, but the NFP in sense will come higher, but what a big takes will be is the unemployment rate as well as the average hourly earnings. Okay, so if all of those three come higher, well, that's gonna drive euro dollar down, pound dollar down, USD JPY up very quick. Where do I think that all of the three will come higher? Well, probably not. We may have a mix towards those, and shoot up a little bit up, shoot down, and then continue sideways. So that's my expectation for the US dollar, but my expectations are more towards bullish than bearish. Okay, What else? Gold. Yeah, gold. I'm looking for a pullback on gold. Okay, as a pullback here, coming back to this area. Maybe if it breaks the bottom here and then breaks the other bottom and continues to trade down like that. But pretty hard to say as on the FOMC week. So we would have to wait and see. US dollar index, again, I continue to expect it to continue the uptrend. It's not a downtrend. I'm not willing to take these as a downtrend. Okay, I'm more towards an uptrend on there. 10 years, 2 years. Yeah, they sing. Yeah, look at that. See, US 10, 2 years. It's crazily up. Japanese 10 years. Yeah, it was all the way here to 93. Europe 2 years, Europe 10 years, Australia 2 years, Australia 10 years, and the E-mini. Yeah, guys, that's pretty much it from for this week. Okay, then. Thanks everyone to join. Hopefully we can catch up on Thursday again and with some good news as the trade's working in our favor. If you have any questions on Thursday for Australia. So I will send the link on the Telegram, so you guys don't need to worry, but it's good to register. Sometimes I can forget. But yeah, thank you so much. Have a good week, and catch up with you guys on Thursday. Watch all the videos on YouTube as well, and stay tuned.